What does insurance cost for a manufacturer? In this video, I'm going to discuss the cost of business insurance for a manufacturing company, what the needs are, how you go about getting the right coverage, coming right up. Okay, let's start with the types of business insurance commonly purchased by manufacturers. The first is going to be a package policy, which combines general liability and property insurance coverages. For smaller manufacturers, this can often be done on a business owner's or BOP policy pretty affordably. For larger firms that need a higher degree of customization, that'll usually mean a commercial package policy. This is where your product's liability insurance is covered. Next on the list will be workers' comp. And this is often an area of pain for a lot of manufacturers. Worker injuries can drive up the cost of workers' compensation, and this is where a good set of controls and risk management plans come into play. Number 3 is product recall insurance, which protects you from the costs associated with a recall of a faulty, dangerous, or potentially contaminated product from the marketplace. The cost of a recall can be huge and are not covered by your product's liability policy, so we recommend this form of coverage highly. Next on the list is boiler and machinery, often called mechanical breakdown insurance, to protect you from the cost of a breakdown or failure of production equipment and the subsequent loss of income. The last of the top 5 on my list is cyber insurance. Manufacturers today face an increased threat from cyber due to the connectivity of production equipment to networks and other systems. Those are the top 5 elements we talk about with manufacturers. But then there are other policies as well we have to review. Employment practice liability insurance, D&O, manufacturers, E&O, commercial auto, umbrella, and some more. All right, now let's talk about the cost for these insurance policies. If you do a Google search for insurance costs for manufacturers, you're going to see some online sellers quoting some ridiculously low numbers, which are nothing more than a come on, trying to get you to click on their websites to get a quote started. As an example, Insurion says the median price for a manufacturer's BOP policy is $1,090 per year. Insurance Track quotes numbers as low as $400 to $500 a year for liability for a manufacturer. And General Liability Insure.com says that it's between $57 and $89 a month for a small manufacturing business. These are examples of unrealistic numbers being tossed out because I don't think these firms want to give you real, honest answers and give you the straight talk on costs. Let's take a look at what factors determine the cost of insurance for manufacturers. There are many, so I'm only going to hit on the biggest drivers. First is the type of products you're making. The higher the hazard, the more expensive. As an example, a toy manufacturer will pay more than a company making flower pots. Consumable products will drive insurance costs higher than most durable goods. The size of the firm, annual sales, payrolls are going to determine the price of your liability, workers' comp, and recall insurance. Third is the limits of coverage you buy. A small food products manufacturer working out of a shared kitchen space won't need a lot of property insurance, so their costs will be lower than a food manufacturer with a 500,000 square foot plant loaded with high-end processing equipment. The same is true for liability limits. And then there are pricing issues relative to claim history, your risk controls, safety, and so forth. So you're probably asking at this point, can you tell me what it's going to cost? Actually, throwing a number out is, as I mentioned earlier, unrealistic because of the dozens of factors that affect the price of insurance for manufacturers. But I can give you my thoughts on how to get the best insurance for your manufacturing company. In my opinion, it starts with a conversation with a skilled broker who knows a lot about insurance and a lot about the risks that manufacturers face. In addition, that broker should represent the top insurance companies protecting manufacturers, like me. If you have insurance already and you're not happy with the level of service or stewardship of your account, then a review of your current policies may be in order. If you're a startup, then it means taking a deep dive into your exposures, contract requirements, and other factors to craft a protection plan that fits your needs. Then taking that plan out to the insurance marketplace and working with the top underwriters to find the best deal for you, leaving no stone unturned. Here's the bottom line. You want to work with an expert broker who can do 3 things really well. The first one is build a protection program that fits your particular needs at a competitive price. Number 2 is provide ongoing risk control, safety, and compliance services to help keep your insurance costs low over the long term. And number 3 is support and service your account with a dedicated account manager who can build a relationship with you and you can rely on for certificates, questions, billing issues, and the day-to-day servicing of your account. And I think we do all 3 things very well. In fact, we've got tons of reviews and testimonials from clients telling us that we are very effective and professional. So what are the next steps? Click the Let's Chat button above and let's get started. I promise when we connect, you're not going to get any heavy-duty sales job or aggressiveness on the phone. Just some honest conversation to see if we're a good fit for you and your business insurance needs. Thanks.